Today is on a Monday, and this is my bias. So if I'm right, this market is still bullish. You can see it didn't take the high of this consolidation on Friday and then dropped. So if you take the range from this high to this low, you realize that today the market has retraced to equilibrium, and once market retraces to equilibrium, it has a high chance to go and break to the upside. So since the market left these relatively equal highs, there's a high probability that it will go there. So another thing I'm looking for is that the market is at a key support and resistance level. As you can see, the market has dropped to the one of the pivot point. So if it's bullish, it's gonna form the low of the day at this support one. Then you can target the pivot point and then the resistance one. So if you also go to the 1 hour, you realize that the market is so close to the pivot level. So if it reverses and closes above this 208.65, then it's very likely that this will be our first weekly target. Okay, above these relatively equal highs that we marked on the MT5, you can see clearly that this is a very relatively equal highs that the market is going to aim for if we are bullish. But if we are bearish, I don't mind the market dropping to this level, but since it's at equilibrium, this is a good level to look for a reversal, and then the market goes to these highs. For now, I'm just waiting to see how at least this or the next candle for 5 a.m. 5 a.m. is when also the 4-hour candle opens. So I am waiting to see how this candle closes and the next one. So if I can find an entry, I'm going buys. But if not, then I'm going to wait to see how today plays out. But there's a very high likelihood that I'll get an entry today. So it's a few hours to, or it's about 30 minutes to the close of Asian Open. As you can see, my trade is running into a winner. I've been holding this trade for a few hours now. Traded below the previous day low, entered into a order block. You can see it has rejected very well. This is a key level, so you'd expect that price will reach out to this next key level, big figure level, possibly break above this next or midpoint of these two big figure levels. So if this 4-hour closes bullish, okay, by about 9 a.m., it will close at 9 a.m. The next one obviously opens at 9 a.m. EAT. I expect this to be a protected low, so price could push to this high. So price is likely to hit my target, and I'll have achieved my phase one target on this 5k funding peaks challenge. So the next big challenge is price breaking above this midpoint of these two big figure levels, and then trade above this new day opening up. Today is we have JPY bank holiday. Hopefully USD will be stronger to go and liquidate this high over here. So I'll hold this trade. I have positive expectations. The entry was at a safe place. The stop loss is predetermined. It's good. So no messing this up. I will not change your bias mid trade for as long as this that candle closes bullish. Then I can expect the next few candles, 4 candles, to be bullish too. So I'm going to hold this trade, no pressure, no nagging. If it hits target, then I'll be good. So today is on Wednesday, 25th of February, and yesterday we had an up close, candle closure. I participated in this move halfway to this high pre-London Open retracement, then breakout. We had an expectation that the price will trade above these relatively equal highs, but I didn't participate in this move since the market stopped me at break-even. You can see I had this execution right here, which was stopped out at break-even. Pre-Asian Open, I had a trade executed at this level on the hourly chart, but I only held it for a 1:1 risk to reward ratio, but it ended up going even higher. This would have had achieved my weekly profit target, but I simply didn't held on it for longer because I expected a retracement which didn't happen. You can see the retracement happened pre-London Open, and then the breakout above these relatively equal highs. So today I'm still expecting bullish prices. You can see we had an up close day. So after an up close day, the probability of having a bullish day or a buy setup on the next day, which is now today, is very high. But I would like to see some retracement, though I'm not getting attached to the idea that I must get a retracement. But if I get some shorts I'm going to sell, I can go in with the 1% risk and then aim for 2%, or I can risk 2% on a 1:1 and aim for the 2%. So that's my expectation for today. I still would want to see price get to this to 11.10 level today, because if it closes bearish, the probability of reversing to these lows is will be very likely, but it's not early to shift buyers before we have a down close day that doesn't take the previous day's high. So as long as the previous day was bullish, today we look for buy trades after retracements or sell trades on retracements, and I can see this candle closing bearish on the next 3 minutes means this price is likely to go to this short-term low before expanding higher. So I'm just scalping shorts, looking for the first at least 1 hour candle of the Asian Open to be bearish. Let's see how it goes. Now I'm looking at the trades journal for yesterday and realized that I did fuck up for a little. So you can see I started with an equity of 5,200 USD. So I just needed $100 to pass this phase 1 challenge. But here is what I ended up doing. Executed a 0.7 lots sales on GJ, which I minimized the risk, and I was stopped out at about $62. Okay, the target was to 10.02. So you can see price came to the target, and that TP would have been hit because 02 had accounted already for the spreads.
but you see, I took a loss on this high probability. This was high probability even though it went into a drawdown. So after it hit my stop loss, I found a re-entry. The stop loss was up here. Then I manually bailed out of the trade, then got in again, but this time round I didn't. Uh, the take profit didn't hit, so I ended up being stopped out on a loser. You see, all these three trades had a loss of about $132, and the maximum daily loss is $150. So I was about $23 to hit the maximum uh, daily daily loss. So I would not have executed again for that day. But you see, now since I missed out on securing $100 from this, because the reason, as you can see, I have written here is this is the all this trade was one trade idea to short for about 25 pips. One trade idea that was micromanaged. Initial risk was 2%. You see on this trade right here that I minimized the risk. The stop loss was up here and the TP was at to 10.02. So that was about a 1:1 risk to reward ratio. So I was looking for 100 to pass this challenge. Okay. Then on this consolidation, I reduced the risk of the stop loss above this fair value gap on the 6-minute time frame and the 5-minute time frame. So I ended up being stopped out, looking for a re-entry that I didn't hold on to. So ended up losing more money than I had risked on the on the first trade. And you see, if I held this trade with the initial risk, then it would have hit take profit and I would have passed the first phase of this 5K challenge. But I didn't. As you can see, this was a scalp. I didn't expect price to move any lower than to 10 level. Why? Because the previous day, which was on Tuesday, had closed bullish on the daily chart. So I expected this day to be bullish, but since Asia always provide a retracement, I was looking that's why I was looking for this short idea. The fact that we had a short-term low here, which was sell-side liquidity. You can see price traded below it, then expanded higher, then retraced pre-London open. I would have had an entry around this level, then secured around 50 pips or 25 pips to pass the challenge. But you see, messing up in this session, uh, I made sure I missed out on this trade because I didn't want to hit the maximum daily loss of about 3%, since I had already lost about 2.5%. So I was only remaining with 0.5%, which I would not have risked to lose this account. So I ended up not taking this high probability trade right here. But you see, it would have been a winner, since even in my journal, I have this trade on my marked on my platform. So here would have been the trade for the day if only I waited for this high probability moment instead of messing it all up here on this level, because this move down here was a scalp. Even though it would have hit take profit, it was not the wisest thing to do. So you can see I would have had an entry here. The actual take profit was about 75 pips, but I needed less than that to pass the challenge, which of course, as you have seen, I didn't. So I'm back to about 1.5%. I need about 4.5% to pass this challenge again. You see, these are the minor setbacks that you don't see on social media, but here you're getting it uh, real and live. You see, every day I have had an opportunity to pass this challenge every day. As you can see, the first on Monday I was already up $100, but the expected was $300 if this trade hit TP, which I missed TP with 3 pips. I had an opportunity to close the trade at 4%, which is 200, but I didn't. So the trade ended up going back to 2%, and it also violated the stop loss if I would have held. So this was a winner that was closed with a third of the expected profit target. So I missed out on passing the challenge that day. Tuesday again, my account was uh, 5100, so I needed only 200 to pass this challenge. What happened is, on the first trade during Asia, I should have held this trade instead of crossing it at 1 hour. I should have held to 2 hour and I would have passed the challenge with $200, but I didn't. So I ended up taking a re-entry after realizing that the market had already offered an entry, which was topped out at break even. So you see that day ended with only a 2%, and I was up 4% on this account, which is $5,200. So I would have passed that day, but I didn't. So I had $100 remaining to pass the challenge. So on Wednesday, as you can see, the mess happened and I was back to square one. 1.5% up, and now I need 4.5% to pass this challenge. So just realize that I'm pushing it too hard, that sometimes I forget I need the bare minimum to pass this challenge. And even though I should have at least a trade every day, because if I held this and I entered at the right time, this would have been a winner and I would have passed the challenge. Or if I didn't, the second day, which was Tuesday, I should have held this to 2 hour and I would pass the challenge. And if not, during Asia, I should have minimized the risk. So I had an opportunity to capitalize on all these opportunities inside the daily range.
So today is on that Thursday, 26th of February 2026, and I'm currently looking at uh, GBP JPY. It's about that 30, is it 42 minutes? About 42 minutes to Asian Open, and as you can see, the market is retracing from previous day's high. It didn't trade above previous day's high at the open. I'm looking at this candle that is going down, and since the previous day was bullish, I'm still expecting today, since it's also a Thursday, to be also bullish or to trade at least to the previous day's high. And if the bias is going to shift anytime soon, uh, maybe for retracement, for me to shift uh, in the short term to leaves at least a 3 bar pattern. That way I can shift to bearish. I have to see down close candle that leaves at least a 3-bar candle pattern. That way I can shift to bearish in the short term. But now, since previous days, the previous day was uh, closed bullish, and also the day before that closed bullish. So this price action on the daily time frame is bullish. Monday closed bearish, but it traded below Friday's low. So meaning Friday's high still had buy side liquidity. As you also remember, we had these relatively equal highs on the daily chart, and also it's visible on the lower time frames like on the hourly chart. So if you take the weekly range from this high to this low, the market has already traded to equilibrium already, which is midpoint of that range. Okay, so yesterday we had buy signals. Today there's also buy signal in that the market is likely to trade above previous day's high, and only if it closes bearish will we shift bias to the to bearish in the short term, not in the long term. Okay, so that is my expectation today. So if you can get a buy in Asia, or if not possible, then London Open, then you can ride the move high to the previous day's high. Then you can call it a week. But today and tomorrow, which will be on Friday, I'm aiming for just 75 pips and I'm done. So I was stopped out on this UJ buys. Stop loss was about 20 pips for 2% risk. So this is execution. This execution, you can see I entered on this key level, price dropped to another key level. The low of this 1 hour fair value gap. This is something I had not considered that it might likely go to, because I used a 15-minute order block, which is this. So I thought because price had reacted already, it was safe to go buys. So I bought. Price retraced to the stop loss, the low of the fair value gap. Then it's going up now. So I've decided not to execute on UJ. Even though this is a valid setup, I still expect a retracement down here to this order block on the 15 minutes. Is it on the 15 minutes? On the 30 minutes, you can see it can or it might not, but we'll target in previous days high. On GBP, JPY, same thing. If this candle engulfs the previous one, then there's a high likelihood the next target will be the previous day's high. And you can also see that my target is beyond that, which is at is it that was a sloppy execution on USD JPY. %2% this early morning. That's a big setback. But we see whether we can recoup probably before tomorrow, and then know what's next. So we have already had this candle trading above the high of the open of the previous candle, which is CSD. We might leave this open for now, but price might come to revisit these zones later, maybe when the buyers shift to short-term bearish. But for now, let's see if this buy idea will play out. So today is on a Friday, and it's the last trading day of the month. So yesterday I had two losing trades where I lost about 2.8%, and yesterday is just those days where I got uh, the wrong bias. So here is my trade that I executed on GBP JPY. You can see the market invalidated my idea to go longs and then dropped. I didn't expect yesterday to be this bearish, so I didn't enter again because I had already lost about 2.8%, and the maximum daily loss is 3%. So there's no way I would have entered any other trade or even stayed in the chart uh, to spot any opportunity. Was on GBP JPY. I got it wrong and lost about 0.5% on GBP JPY after I was stopped out on USD JPY. Uh, the candle opens posted a three-bar candle pattern reversal. I was trying to trade in between here, aiming for market to break above this previous day's high, but you can see Asia was a consolidation. Here it is. Asia was somewhere here in a consolidation. If you can put a vertical line, you can see that Asia, which is started at 4 a.m., this platform is 1 hour behind. You can see that Asia was a consolidation. Then, then uh, at the end of Asian Open, we had this protraction higher to this 4-hour fair value gap. You can see this candle, 4-hour candle high, came into this 4-hour fair value gap, made the high of the session, and dropped to this 211 big figure key level before retracing, then dropping again in uh, London close. Actually, I would have had an entry at this equilibrium level of these two key levels, but I had already lost close to the maximum daily loss, so there was no way I was going to find an entry again for that day. So that is a day where uh, you lose everything when you risk aggressively on the first uh, trade when you're wrong in bias. So that was it for yesterday. Currently, I'm back down to a drawdown of about 1.5% on this account. 5%. I need about 7.5% to pass this challenge because it's a pro account. So that's all. Let's see how today will pan out. So hello traders, I'm doing the review for Friday's trades on Saturday morning at 5 a.m. Today is on 28th of February. It's end month, and as you can see on the screen, these were my trades for yesterday. I had two losing trades on GBP JPY, and as you can see, I had my bias right and my levels right, but the market was just too choppy for my entries that I ended up being stopped out on these two trades. On the first trade, as you shall see on my journal, which is this trade right here, I lost 2%, and on the other trade, which is this trade, I lost about 0.5%.
So I ended the day at negative 2.5%. This made it, yesterday was a third consecutive losing day, where I ended up on a drawdown of, I have lost about 8% for the last 3 trading days for the for this trade that you have seen right here. So yesterday I lost 2 trades on Thursday. I lost this trade on GBP JPY. I didn't trade again, but I also had, before this trade, I had a trade on USD JPY. This was the trade on USD JPY that I lost. I didn't participate in this trade, even though it was a high probability trade. This is how Thursday looked like on USD JPY. As you can see on the journal, I lost about 2.23% on USD JPY and about 0.6% on GG. So these 2 days I was already down 5% on Thursday and on Friday. Remember, on Wednesday I had lost about 2.65%. So I am ending my week at a drawdown of 4%. If you remember very well, we were up $200, which is 4%, and this trade was with a floating profit of about we were about $10 to passing this uh, this phase one challenge of funding pips. But you can see I went on tilt, where my bias uh, for these 3 days was not intact, and I have ended up closing at a negative 4% drawdown. So if you go to my funding pips dashboard, you realize that these the last 3 trading days, which is from Wednesday, Thursday, and Friday, I have lost an average of about 8%. Every day I was down about 2.5%, above 2.5%, and this day, which was on Thursday, came the closest to hitting the maximum daily loss of 3%, which is $150. I was $10 to hitting the maximum daily loss, which I didn't. So I didn't lose the account. I ended up losing again on GG, the 2 trades that I've shown you on GG. So I'm ending the week at negative 4%. As you can see here, I'm down at negative 4% on this challenge. So the maximum drawdown on this two-step pro account is 6%. So I have 2% remaining to play with until I blow this account. I have been risking 2% per every trade. For the first trade of the day, I've been risking 2%. So I'm going to minimize the risk to 1%. So if you see the equity curve, we were well up 4%. We ended up losing 8% back to drawdown, a 4% drawdown. So you can see the equity curve here was sharp because I was risking more than 2% in a day. So for those 3 consecutive losing days, you can see how my equity curve looks like. And that's all. You have spent the trading week with me. You have seen the first 2 days of the week. We were up, and we would have closed the week in profit and passed this challenge account. But challenges will always be there in trading, and we are not quitting. So I'm looking forward to next week and see how it's going to play out.
if you look at this section here, that's why I'm saying I only had about $10 remaining to pass this account, which is that trade on that didn't hit the profit on Monday. So you can see my equity went as far as 52.93 and the target was 5300. So it was $7 to pass this challenge, but the trade didn't hit take profit and ended up closing at 2%, and the target was 6% for that trade. So that's how I missed out on passing this challenge. Let's see how next week will be, if next week will be favorable for us. So remember to subscribe if you have not. uh, until next time, good luck.